P take the responsibility. I am going to rate about 30,000 share. Firm underwriting means the responsibility. I am definitely take the share. Mark applications are 5,000, 10,000, 2,500. Hello, my dear students. I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. This session, I am going to hand Corporate Accounting 1, third semester, Unit 1, Session 6 in favor of BCom regarding underwriting of shares and debentures. We already told underwriters are those persons who undertake to write the shares of the company. If the public is not subscribed, they will see that the public should subscribe the share. So they help them what's called to company to purchase the share. So we'll move on to problem now. Himalaya Limited issued 50,000 share of rupees 10 each at par. The issue was underwritten as follows. P take the responsibility. I am going to rate about 30,000 share. Q take the responsibility. I am writing, see that the public should subscribe how much? 12,500 share, or will subscribe 7,500 share. This is the responsibility goes in favor of P, in favor of Q, in favor of R. The total subscription excluding firm underwriting. So firm underwriting means the responsibility, I am definitely take the share, but including mark applied with were 25,000 share. Among them, the marked applications are 5,000 share, 10,000 share, 2,000 share. These are all called marked application. Then the underwriter made application of for firm underwriting. So 4,000 share, 1,000. This is firm underwriting, definitely underwriting. So definitely they are taking the responsibility. Take how many share? P, 4,000 share, Q, 1,500 share, R, 5,000. Definitely they are going to take. So they personally purchase how much? 4,000 share, 1,500 share, 5,000 share, which includes in the firm underwriting. Here, excluding firm underwriting means leaving this. We'll go with the working note now. Total application received 25,000. Add firm underwriting 10,500. This is your firm underwriting. Then minus mark application. Here your mark application 10 plus 5, 15, 17,500. Deduct, balance is 18,000 minus firm underwriting 10,500. Remaining is unmarked applications. Okay. Then if it is that P is taking how much? 30,000 shares. Then Q 12,500. Then R 7,500. Take the ratio, cancel these two. 300 is to 12, 125 is to 75. Divided by 25, 300 divided by 25 is equal to 12. So 125 divided by 25 is 5. 3. So there is the ratio of 12 is to 5 is to 3. 25 3s are 25 5s are. This is 300 divided by 12s are. So 12 is to 5 is to 3. So the gross liability is 30,125.75. This is 25 threes are 25 fives are 25 12s are. This is 300 divided by is equal to 12. This is 12, 25 fives are 3s. So they are in the ratio of 12 is to 5 is to 3. Your gross liability 30,000, 12,500, 7,000, 50,000. Among them, mark applications are 5,000, 10,000, 2,500. The balance is 25,000, 2,500, 5,000. Then, firm underwriting, they have given separately how to deduct 4,000, 1,500, 5,000, 10,000, 500. Balance 21,000, 1,000, nil 22,000 minus unmarked applications as per the working note. See that? 7,500. So 7,500 this here. 12 by 20. This is 7,500 into 12 divided by 20. 4,500. This is 4,500. If we divide 1,875, 1,125. So they are in the ratio of, it has been 7,500 has been divided in the ratio 12 is to 5 is to 3. 4,500 goes to P, 1,875 goes to Q, 1,125 goes to C, 7,500. Deduct 16,500, surplus 875, surplus 125. Now, it's a net liability. The surplus of Q, surplus of R should be transferred to P. Which one? Surplus of Q, surplus of R transferred to here. Here, less surplus of Q and R, 2,000. If you add this, no, 2,000 should be transferred to P, 875. So this is 16,000 minus plus cancelled out. The balance is 14,500, 0. Add firm underwriting separately. 4,000 goes to P, 1,500 goes to Q, 5,000 main. So total liability of the underwriting 18,500 responsibility. Q has to write responsibility 1,500. R is 5,000. Totally 25,000 is net liability for each underwriter. So responsibility goes to P 18,500. Responsibility Q 1,500. Responsibility R 5,000. Totally 25,000. So this you have to remember. Here 21,000 mark application. Here 1,875 is the surplus. The entire surplus is 2,000. Should be transferred to whom? P. 875 goes in favor of Q. 1,125 in favor of R. Then 14,500. Add firm underwriting separately. So it will come. We'll move on to next problem. Khanna Limited issued 1 lakh share which were underwritten as follows. Harshad 60,000 share, Mehta 25,000 share, Badri 15,000 share. The underwriters made application for underwriting as under Harsha 8,000 share, Mehta 3,000 share, Badri 10,000 share. The total subscription excluding firm underwriting but including mark application were 50,000 share. The mark application were as follows. You are required. What is the total application? Working note. Total application received 50,000. Add firm underwriting 21,000. Totally it becomes 71,000. Out of that, mark application is 35,000. Balance is 36,000. Minus firm underwriting is 21,000. Balance is 15,000. 50,000, add firm underwriting 21,000, minus mark application 35,000, minus firm underwriting is 21,000, and the balance unmarked, whatever the balance come is called unmarked application. Generally, when you receive application, it includes mark application and unmarked application, but it includes the firm underwriting also. Hello, in this session, I complete the two problem which belongs to firm underwriting, how to include the firm writing, how to exclude the firm writing, so that we have solved the two problems including the firm underwriting. So we'll have in the next session pre-incorporation and post-incorporation. Till goodbye, meet in the next class.